Hi everyone, Charlie McNamara here at Paragon-Wealth, sitting with Ricardo Ferreira, our portfolio manager, and today we're going to go over some questions that we've had. So thanks for joining us, everyone. Ricardo, did you want to?
Hey everybody, how you doing? I'm glad to be with you again, and welcome to our Paragon Perspectives, the Long Watch.
We're getting a lot of questions, Ricardo, specifically about portfolios going forward, what's happening around the world with election, wars, everything that's happening. So today, let's tackle a few of these questions head on and see what you think.
Yeah, let's do it.
All right, let's start with the big one. Should I be worried about my individual portfolio with everything going on today?
Yeah, geopolitics can make people feel uneasy, and a lot of times people can think like, oh, maybe I should do something. But the fact of the matter is that geopolitics has rarely really created a big mess inside people's investment accounts.
Mm-hmm.
The trick is, it's not necessarily what you do, but it's what you don't do that sometimes is better.
Yes.
So throughout history, there's always been wars, there's always been elections, there's always been, pandemics, things like that, and we've always kind of come on the better side of that.
Yeah, and I guess, to be honest, the first thing people think, they always think about them, and they think, with all this going on, does this mean that we're headed for another market crash? I know we had a pullback in April of this year with the tariffs, but I mean, nobody knows for sure. If we did, you'd be flying around. If you did, you'd be flying around on your Gulfstream G500. But what do you think about that? Do you think we're have another market crash?
Yeah, I mean, it's kind of like I said, geopolitics will definitely, sometimes make the market move, but all of that is short term, right? And nothing beats like a good long-term plan. So we have to remember, even if the market does go down, your investments do go down a little bit, like I said before, throughout all of the other crises that we've had throughout the world, and wars and famine and everything else, portfolios have always rebounded. Again, the key is to be diversified. The key is to be investing for a goal. And those kind of practices will help keep our emotions kind of out of it.
Exactly. So to reiterate, not every single headline matters. What would you say the headlines or the information that come out would matter? What may change things going forward?
Well, we want to look for things that will structurally change, how we think about the world, right? So, a war, yeah, that's going to happen, but it's definitely like, where is that war at? Maybe that's the bigger question, right? If it was a war that the U.S. was involved with a major trading partner, man, that would probably be something that we would have to really take a hard look at. If it was, one of our major trading partners creating war with another one of our major trading partners, that would also be something that we could potentially have to take a hard look at. So it's always not necessarily like every global event, but does that global event lead to a structural change within our society is really how we would look at it.
Gotcha. Talking about that, do you think there's any tweaks or changes, big ones that we have to make to the portfolios right now?
Yeah, we're constantly looking at ways to be able to tighten up and improve our portfolios. So, the changes that we make, they're not, necessarily as a result of something. We try and anticipate what's going on in the world ahead of time and slowly tweak our portfolios in that direction as it is. So we try not to react to news because we know a lot of the time that news will cause short-term spurts. And if anything, sometimes like in April, we had the tariff stuff going on back then. It was actually a good buying opportunity. So we look at it through that kind of a lens.
And real quick, just a timely piece today, November 6th, we have seen AI stocks come down a little bit from valuation expectations. So are you worried about that or?
No, not really. We have to remember, so from the bottom of this year in April to now, the market has basically been high and to the right the whole time. So there are a lot of companies out there that may be a little bit stretched, right? And I think all we're seeing right now is just a little bit of a reset of that, and people taking a little bit of money off the table. This time of year, we also have tax loss harvesting phenomenons going on where institutional investors and even retail investors will look at their portfolios and say, hey, what can I sell for a tax loss and get a little bit of a help on my taxes.
Or shore up the returns on the upside, I guess.
Right. Well, that's the other phenomenon you might have too, is if there are fund managers out there that are kind of behind the rest of the market and they want to catch up, it could actually be a little bit of a tailwind to the market and help push the market up at the end of the year because they're trying to catch up and they're buying up all these stocks. But these day-to-day moves like we're seeing today and other days, they don't necessarily I don't really look at them too hard.
Okay, with that in mind and back to the geopolitical stuff that we talked about, is there any sector that you can think of that may benefit going forward?
Absolutely. I think, with the way that the world looks today, you have a couple of sectors that are top of mind for me. One is technology. You have so many companies that are spending a lot of money to be able to create this infrastructure for their technology. You have companies like Amazon, Microsoft, Facebook, Google. They're all spending tens of billions of dollars to bring up all their AI infrastructure and build all these data centers out. And even that just by itself, which has been a big cause of our growth this year in the economy, will lead to other areas. So then you have the power sector, power companies that are helping to build like our utility, electrical infrastructure, gas infrastructure to be able to power all of these huge data centers. You have onshoring of manufacturing, right? We've been hearing a lot of companies saying that they're either going to be expanding factories here or building new factories here. There's been some discussion about Eli Lilly opening up new facilities here, which is a pharmaceutical company. And the industrials in those areas may benefit. Companies like Emerson Electric that does a lot of automation work. Companies like Eaton Corp that has a lot of power supply materials that they sell to utilities and to other companies. And in the energy space, you have a lot of talk about nuclear that's going to be around, that's going to be being pushed as a source of clean and cheap energy over the next 10 years. It's a long windup, but if you look at a company like Flowserve, and these are not recommendations, don't go out buying any of these companies, but if you look at a company like Flowserve, they just reported their earnings last week and they had a one-day 26% pop in their earnings because they're extremely positive on what they're going to be able to get in revenues with the nuclear build-out that's supposed to be happening over the next 10 years. They're talking about potentially $100 billion in revenues over 10 years or something like that. Yeah.
So what would you say the bottom line is?
The bottom line is always, like we always say, stay diversified, always have a plan, be investing towards something, towards your retirement goals or some other financial goal or financial plan that you have. And obviously, if there's ever any questions or any concerns, if you're just curious about a company or anything like that, you can always give us a call. We get clients asking us all the time, like, hey, did you ever hear of this or hear that? Or what do you think about, what's going on with the tariffs or what's going on with, elections or whatever. And we're always happy to talk to people. I mean, this is what we geek out on every day.
I like that. We really can't control, obviously, the markets or the global geopolitical stuff. You just have to really focus. What you're saying is staying diversified and kind of you'll be changing the asset allocation over into sectors that you think may do a little bit better. But yeah, absolutely. We have to pick, that's our job, or your job is to help pick the right stocks in the environment that we're given.
Yeah.
But, well, thanks a lot. Thank you so much for joining us on the Paragon Perspective, The Long Watch. Charlie McNamara, Ricardo Ferreira, and we'll see you next time.
Thank you, guys.
Thanks.